Thanks for everybody joining us today, and thanks, James. We're always happy to do these events with the team. It's been super fun thus far, and we expect this to keep up. So at NetSuite, we spend a lot of our time working with what we would call sort of small, medium enterprises, but really a lot of it is startups, right? And so as you start to scale your business, you need finance, you need ERP, you need inventory management, all that kind of stuff. And so we provide a single platform to manage your business. So I come from a background of software, not surprisingly, to be here today, and spend my time now running the marketing team and some other organizations. And then I also spend a lot of time as an angel investor. So I've spent time on the kind of institutional side of investment and then moved over to be an angel. And what we like to see from companies, if I put on my VC hat on, we want to see you have a strong addressable market, that you've got a good story, that you've got a good team, all that kind of stuff. And our presenters today have all that stuff. And they're all early stage. So there's a lot to be learned here from the presenters. There's a lot to be learned from the questions. We try very hard to make this very positive for everybody. It's not always like that. Having raised a bunch of money myself for several companies and then been on the other side, it can often be very painful. But I would tell you that there is no real better experience as a working human than starting a company and then going out into the world and getting other people to buy into what you're doing and then going and build something great. The other thing I would say is that it's important to remember that the funding is just merely the first step of what will be a much more difficult journey. As awful or as awesome as fundraising may be, it's just the beginning. And it's really important to keep that in mind, that running a company is, I don't know, 100 times more difficult, maybe more, exponentially. But I think there's great opportunities out there today. So we've obviously had a lot of turmoil in our world, but we have to keep going and recognize that there's a lot of things that have happened that we can now say, here are the opportunities that have come from that. And, let's go make the world a better place. And so that's what we're here for. That's what we want to hear from all of you. So we look forward to hearing the pitches. We look forward to taking your questions from everybody out in the universe. And that's it. So thanks for joining us today.
So without further ado, I think we should get on to the pitches. First up, we have Caroline, who is the founder and CEO of Egoli Media, and they enable real-time personalized delivery of video content. So really looking forward to this one. So what we'll do is we'll go straight to the video and then jump into the questions.
Egoli was designed for anybody that creates content, and specifically for people who want to be able to generate revenue from that content. The basic principle is that every person that is featured, every action that is identified, things like weather conditions, location, is given a tag, and that tag becomes a unique search criteria that allows you to go back and find that content very, very easily. For 21 years, I ran a production company in London that became prolific in the world of sport, and over the years amassed 15,000 hours of content. So at that point, I became really interested in the idea that one could automate a process that allowed content creators and rights holders to understand exactly what they owned and what they could do with it. But its primary purpose is to facilitate the generation of revenue for sports rights holders. So I set Egoli up in 2019. We're now working with the Premier League, with Sky Sports, with the International Paralympic Committee, and just starting to develop proof of concepts in American football, in golf, and also now starting to look at archives of huge global corporate organizations like oil companies and pharmaceutical companies who have very large libraries of content. The team that has been on this journey from the beginning of 2020 is without question the most talented team of people I have ever met. They're researchers, they're mathematicians, they're incredible adventurers and prospectors who are all committed to creating something that is going to transform the way in which we as human beings interact, organize, and distribute our content. We help content creators and rights holders organize all of their content. We've built a very, very beautiful cloud infrastructure where content is housed and structured in a way that makes it very accessible. Similarly, we process all of that content to annotate it and then allow them to download and distribute that content very, very easily. So criteria like goals in a football match or key people that you want to identify in highlights packages can be pre-entered into the system to create a clips reel in order to create very, very efficiently really good storytelling. We can certainly get from being a revenue generating business to a hyper-scaled revenue generating business much faster if we can bring the right sort of investment into the business. Egoli means place of gold. It's all about digging through that igneous rock to finding those nuggets of gold that really help to tell the story or achieve some kind of proof point for the content creator.
Great video, Caroline, and obviously such an exciting product as well. So let's dive straight into the questions. So Dave, would you like to ask your question first?
Yeah, I get the honor. So I am an unabashed fanboy of this product. So I'll start with that. So I have to disclose up front, I think it's super cool. My question for you, Caroline, is there is a very obvious scale issue when it comes to video content, right? Of how do you sort of address that? And so what I've been trying to figure out is where is the hiccup in the system that you guys have uniquely identified in terms of storage as well as kind of distribution across a broader infrastructure.
I think that I mean, one can't get away from the fact that the migration towards having a machine learning based model, which does of course provide the scale because one can use artificial intelligence to identify content, it is a migratory process. So we do start in most cases with tens, hundreds of thousands of hours of videotape that gets digitized. And I have to confess that that is the most frustrating and the most difficult part of the entire process. As soon as we do get past that inevitable human interaction with tapes and drives and things, the entire process becomes a lot more straightforward because we can control the way in which the technology then is applied to achieve whatever use case outcome is determined by the customer. So the hiccup is really at the beginning of the process. I mean, just by way of explanation, an organization like the NBA has 1 million hours of content, which is still on tape and film. So that hiccup of actually getting the content into a digital format that's workable in the cloud is the most challenging piece.
Great. And Juliet, would you like to ask your question, please?
Yeah, sure. Thank you, Caroline. Very cool video and very cool product as well.
Thank you.
Could you dig a little bit more in terms of your go-to-market strategy? So I understand that obviously you're focusing right now on the kind of sport world. Is that, and I guess your technology can have multiple use cases, and I do like a bit of focus at early stage, so that's great. But can you dig a little bit more on like who is your target key customer? What size are you looking for in terms of companies that you're selling to? And how do you think you will scale moving forwards? And what's kind of the broader vision on the GTM?
I think it might be easiest to start at the ambition end, if you like. So really the market size is, when one takes it beyond sport, is about, in the secondary video content market, is around $50 billion. So we're then in a position where actually the customer base is expanding way beyond a business to business customer base. And this has an application, a huge application in the consumer world. So we do on our roadmap have an intention of being able to deliver direct to consumer, allow consumers to upload and consume their video, their home video, their photography, everything that they create on their iPhone, for instance. That is something that by 2023 will be available to consumers. But in migrating to that ambition, which requires, as you no doubt know, enormous amounts of money, not only dedicated to the technology, but probably more specifically to the marketing, it felt like there needed to be a much more gentle trajectory. And my background is in sports filmmaking. I know the rights holders, I understand their pain points. I understand my pain point as a producer and a director in that environment. So if you like, we've carved out this, the $5 billion market in the sports sector to be able to go to rights holders to help them to break the OTT model. Because where we are at the moment is the OTT model, or the over-the-top model, is a migration from broadcast, but is still not giving rights holders enough control over their own content and their ability to generate revenues. So the Premier League is a perfect example, actually, where they really are so beholden to their TV partners around the world. They have this enormous ambition to take ownership of their content in order to go direct to consumer, but the steps to get there are considerable. So on the bigger end of the scale, those sorts of rights holders are the people we're targeting. On the other hand, because actually the product, once it's trained, is very adaptable and very easy to roll out, ultimately in a SaaS model, until the machine learning has evolved to the point it won't be entirely SaaS, it is still an enterprise business. We can really help rights holders like the International Table Tennis Federation, who have colossal audiences in a very defined geographical area. Or I mean, there are all sorts of crazy sports that have huge followings. Netball in South Asia, for instance. I mean, even when one gets into volleyball and you look at volleyball both in the States, but then also its Asian and Eastern European audiences, they're not products that have really great traction in the traditional revenue generating broadcast rights holder world. So to help those kinds of rights holders to take control of their content and to distribute as they like is very much an objective. So our audience base is pretty broad. But basically people who want to take control of their content and make money from it.
Perfect. And Paul Louis, your question, please.
Yeah, I mean, first of all, it's a really cool product, Caroline. So thank you for this. You know, I think you're really touching a big pain point today. Companies have much more data, much more content that needs to be used. And I think it goes beyond sport. And you mentioned like oil and gas and pharma, and I've seen a few companies in other domains that are looking more and more for data annotation tool, and it's a very hot market. I guess my question is kind of, you know, if you think about it, you mentioned you were kind of enterprise size today. Are you thinking about just, you know, using this content and then kind of getting a revenue share, like basically buying this content and then reselling it yourself? I don't know, to a betting website that wants to have the highlights of the goal, so when you bet, you actually see the goal as well? Or do you think it's purely a SaaS model as you go on the long term?
I think there will be a SaaS application, but the more that I engage with potential customers, and actually it's interesting you mentioned the betting market, the more that we engage with the betting community, the more we realize that actually the enterprise model that allows those sorts of businesses to visualize their own business is going to be hugely important in the early stages. The SaaS piece, I think, comes in once we reach critical mass of the identification of objects. And I mean, basically every single second of video is tagged. So it can be something that you download onto a desktop, and a company like a big oil and gas company, for instance, can tag, log, and operationally manage all of their content. That is very much the SaaS side of it. Where it becomes attached to revenue generation, there is more of an enterprise element. So I think there will probably always be a combination. I started out with the intention of making this a SaaS business, but certainly the complexities have indicated very clearly that the requirement is going to be more on the enterprise end for the foreseeable future.
Okay.
I don't know if that answered your question.
No, it does. It's interesting. Yeah, I think, you know, betting is probably something where I see a lot of applications, right? There are huge businesses that have been created in, you know, getting snippets of like lesser watched sports or lesser watched part of sports and buying these videos for very cheap and then using it to ask people to bet on, you know, tier 2 soccer Ukrainian league.
Yeah.
Which is actually a huge betting market.
I'm not at all surprised to hear that.
Perfect. Okay, Caroline, thank you so much for that great pitch, and thank you for answering the questions as well. So next up we have Russel, who is the CEO of Vesta Property, a marketplace for buying and selling investments in residential property. So once again, we'll go straight to the video and then we'll come back for questions.
Did you know when a landlord decides to sell his or her rented property, they're advised to remove the tenants before they can start marketing that property? The irony is there are thousands of buyers out there who are looking to purchase a buy-to-let And once they've done that, they want to get tenants in place as fast as possible. Both the buyer and the seller lose out on valuable income when that property is vacant through the transactional process. And that's why we have built Vesta Property, an online marketplace that is dedicated to buying and selling properties with tenants. And each property comes with its own overview and all the features to help an investor make an informed decision. Today in the UK, only 2.5% of the private rented sector is owned by institutions. In the US, Germany and the Netherlands, it's more like 25%. So there is a huge opportunity to attract more institutional investment into the private rented sector here in the UK. The Vesta Marketplace is a much more efficient way for individuals and institutions to buy private rented sector stock. And this is already a significant part of the market. In 2016, it was 1.4 trillion, and by 2025, it'll be 1.7 trillion. So it is pretty massive. And rental property transactions in the UK already account for 20% of all residential property transactions. At Vesta, we've recognized this opportunity and we've built a marketplace that is both digital and investor focused, taking up a new space in the property market in the UK. Our focus is on income generating residential investment property, which puts the Vesta marketplace in a very unique position. Vesta is the only agent dedicated to selling properties with tenants in place. We have spent very little money on marketing activity over the last 18 months and already have over £450 million worth of property listed on the Vesta platform. And we have direct access to a lot more. On the sell side, we are marketing properties from across the UK, including flats, apartments, single units or houses, HMOs, whole apartment blocks, purpose-built student accommodation, and entire property portfolios. And on the buy side, we're working with first-time buyers right through to massive institutions to help them buy their product that they want. We're currently a small but very strong team, supported by a very, very experienced board. Having proved the model, we are now doing a fundraise of 4.5 million on a pre-money valuation of 9.5 million to fuel our growth and expand the business. Having run large e-commerce businesses and experienced rapid growth before, I'm really proud of what we've achieved here at Vesta so far, and I'm incredibly excited about the future opportunity.
Right, Russell, thank you so much for putting that video together. And if we stick with the same order for the investors, so Dave, if we start with you, please.
Russell, it's interesting when you look at property management like that, it's almost the most pure form of investment, right? In the sense you're just you don't even know what's in there. Let me ask you maybe a slightly obtuse question here, which is, why don't you go out and raise, like, say, $500 million and start buying all these properties and renting them out yourselves?
It's a very good question. In the long term, it's possibly something that we could do. We could set up a separate part of the business that effectively creates a asset management platform, takes investment from people and basically puts together portfolios and manages them on that basis. So it is something that we could do. I think for us, the focus right now is we want to be a marketplace and we want access to the stock, because if you've got access to the stock, you can kind of do everything off the back of it. So our immediate focus is to ensure that we build enough stock into the platform. If we were going to build something like what you've just described, we would need to have at least a few £1 billion worth of property on the platform, so we can ring fence specific groups of properties that would fit into those types of funds or portfolios. So that's where we're focused, at least for the next, I'd say 18 to 24 months, is to get ourselves into the billions of pounds worth of stock on the platform. And then I mean, we can go into a lot of different directions. We can move into lettings and management. We can move into asset management. We can create funds. There's a lot more. Once you've got access to the stock, you can kind of go in whichever direction makes the most economical sense.
Perfect. Thanks.
Great. And Juliet, on to you.
Yes, thank you, Russell. Could you tell me what's the gritty in terms of the tech that you're building? I appreciate that, you know, marketplace is always like a super nice place where everything is easier and when you have the demand and the supply that meet. But in terms of the gritty of what you're building, what is the edge of your technology that you're building?
So it's a very good question. What's tricky about the property market, especially in the UK, is you know, virtually nothing is online. So we've been very selective of what we've chosen to build initially. And there's a lot of new prop techs are coming out that are attacking different parts of the market. So for example, conveyancing, you know, the legal process, the finance process. And we've decided to focus on the marketplace side of it. As I said to Dave, to focus on owning, you know, having the stock. I think that the area that we do want to get really, really strong in, and I think it's the bit that would make us completely unique in the market, is the data set around investment property. So if you think about it like this, we effectively want to be the Amazon for investment property. And in order to do that, we need to know everything about each investment property, the type of tenants that are in there, the demand for those types of properties, whether your businesses in the local area are growing or closing, so that we understand the future demand for those properties in that specific area. So for me, it's about data and building a very, very rich platform that enables us to interpret that data into the way our both buyers and sellers want to use it to make strategic decisions on where they invest. So we're not there yet, but we've started the process, and part of this investment is to start putting more of that structure in place so that we can get stronger and stronger. And as more prop techs come into this space, our plan is to use those prop techs to access their data and enhance the service that we provide. So we won't go and build everything ourselves, but we'll make the most of what is available when it's available.
Super. Thank you.
Perfect. And Paul Louis, on to your question, please.
Yeah, Russel, I think, you know, it's a really cool idea, really cool startup. And what I like about it is, you know, during a transaction like a selling of a house, it's a great time to sell so many other services, right? And I think you mentioned some could be fund management, could be property management, could be like a mortgage for a new buyer. So you have all these kind of adds-on that you can add as you scale. It could just increase your revenue and your margin, and it's a great time to kind of seize them. So I think that's a great long-term play for you. But I guess my question is kind of, you know, I can go on Zoopla and Rightmove, and I have, you know, most of what's available in the market today. Your platform is a bit more specialized, but I guess how do you curate it? Do you just aggregate everything that, you know, is currently being sold with a tenant, or is it actually like a curation going on where you want to make sure property that are likely to give you a good return on investment? And kind of how do you see this balance as you try to grow?
So everything we list on Vesta, we have signed up as a Vesta listing. So we've had a direct interaction with the person who's selling it or the agent who's selling it. We focus on income generating property or property that has the potential to be income generating. And that's the big point of difference between us and the Zooplas and the Rightmoves and the Boomans in the UK. Their client base is the estate agent and the owner occupier. So the way they present the property, you know, it's more about north facing gardens and great sun, and it smells really good and it's spacious. Whereas what we're doing is we're bringing in the tenancy details, the types of tenants that are in place, the yield that you're able to build off the back of it, the growth in that yield. And we're almost putting a business case around every single property that we present. Now, we do sell some properties to owner occupiers, but we always present it as an investment property first. And we will sell vacant properties. We sell entire blocks. Zoopla and Rightmove and those guys tend to sell single properties, whereas what we're doing is selling single investment properties, entire portfolios, entire blocks, And I mentioned the aim to kind of be like Amazon. Ideally, we want to get to a point where we create a basket, a institution or a family office will come in and say, I want £100 million worth of properties that look like this, and we'll fill their basket for them. And they'll do a single transaction from multiple vendors in one go, and have an instant £100 million portfolio. Now that's where we want to get to. We have done some of those on a smaller scale, on a more manual basis, but our aim is to build that basket capability. And that makes us very different to all of the other platforms like Rightmove and Zoopla, where they are acting on behalf of the agent and introduce the lead to the agent to manage the deal.
Thank you, super clear. But I guess, would you refuse to have, if there's someone that sends you a house and you think actually the potential for return is low, would you still let it on the platform? Are you like agnostic? You just give your report and say it doesn't look very good? Or are you only going to add on the platform, investment opportunities that you think are above a benchmark?
It's a great question. So as a startup, we've taken everything that we could. And initially we did pick up some stock, which we probably should have said no to. We are now much more selective, but sometimes there's different types of buyers. So some people buy for capital return, some people buy because they believe the yield will be good in 5 years' time. So we will take on some stuff that is low yielding, but potentially will have a capital upside. We are being more selective on stock now, but it's more about the price that is being offered. So if a vendor is adamant their property is worth, £500,000 and we believe it's only worth 400, we will sometimes say, well, we won't take it on because we don't think we'll be able to sell it at that price. We try to be very fair in the way we present it. Now, if they can say to us, it's worth 500 because it's got all these bells and whistles and they can prove to us that it's worth that, then we will take it on. But in most cases, to date, we've taken on pretty much what's been brought to us. We are being more selective now, and that is having quite a big impact on what we sell.
Perfect. Russell, we are just about running out of time, but a few quick questions from the audience. So Ravi, good to have you on, but Ravi is asking just a bit more information around your current revenue model and what's your current MRR?
So effectively, we charge a commission to the vendor. We take a commission from the vendor on a successful sale. So we charge between 1.2% and 1.5%, depending on whether it is a exclusive to us or a multi-agent arrangement. We will negotiate some deals that are slightly different depending on the scale and the size of the properties or the portfolios that have been brought to us. And in some instances, we will work with buyers where we actively source properties for them, which we don't have listed, and we will charge them a fee for that, but we don't charge both the buyer and the seller in that scenario.
Perfect. Russell, thank you very much. There are a couple of other questions for you in the chat. So if you wouldn't mind going back to the people in the chat while we move on to the next pitch, that would be great. But thank you very, very much for that. And next up, we have Sean from Revix. So Revix is an intelligent investment management platform. So once again, what we'll do is we will go straight to the video and then we will come back for questions.
As much as $68 trillion will change hands between generations over the next 25 years. And the majority of this wealth will be landing in the hands of the millennial generation. Now, millennials don't invest like their parents did. They expect an Uber-like experience with the ability to create an account in minutes, not days. They want to invest in areas that they find engaging, that have impact. They are DIY investors. They want to invest themselves. And they need a new platform that enables them to do this. So good day, everyone. My name is Sean Sanders. I'm the CEO and founder of Revix. We're a team of 22 fintech, software development, and product design experts. And what do we do? Well, we're a platform that enables everyday people to invest in emerging themes, sectors, and asset classes in an effortless way. And what we've done is we've offered one beautifully designed, modern, and easy to use platform. Revix stands for Revolutionary Investment Experience, and this is exactly what we deliver. an experience-led approach, which we believe to be the future of retail investing. To date, we've raised $3.6 million in our seed rounds and are backed by some notable global investors. We've got some great achievements as well. We were very proud to be able to sponsor the Chelsea versus Leicester FA Cup final recently. We're part of the Berkeley Blockchain Accelerator. We're part of the Qatar FinTech Hub Accelerator as well, and we're the highest rated investment platform in Africa, with a primary focus on the South African market, with our goal now to expand internationally into Europe. We've been featured in Bloomberg, the Sunday Times, CNBC, the World Economic Forum, Bitcoin.com, and Hacker Noon, amongst many other great publications. And as you can imagine, offering cryptocurrency products over the last while, good timing, right, has been a lucrative opportunity for us. We've seen a significant growth, with growth in assets under management growing over 32 times over the last 12 months. Now, crypto has been really interesting for us. We've really enjoyed the ride, but the goal with Revix was always to offer a lot more than just cryptocurrency. So the Revix of today offers several investment products that are very unique to the crypto space. The most unique of which is our crypto bundles. Now, our crypto bundles are sort of like the S&P 500 for crypto, which offer diversified passive exposure to this emerging asset class. Now, going forward, we will be offering a variety of other investment categories. So we'll be offering themes, core investments, as well as alternative investments, all on a single platform. In addition to that, we'll be offering a variety of automated investment tools, which are very behavioral based, and I'll show you an example of one right now. So this tool is called Trigger Happy, and what you can do is create a customized trigger. And when you create this trigger, you can choose a category. So imagine you say fitness. You can say, listen, I want to walk 8,000 steps a day, create a mini goal, and when you achieve that, you'll put $10 automatically into an investment. Now you can challenge friends, and every single time you achieve these goals, we immediately connect to your fitness device's API, and we're able to trigger this event. Now, you can imagine that this is something that can be customized, and it's a really neat way to be able to, and I mean, there's a host of other tools that we have, but it's a really neat way to be able to customize and make investing a bit more engaging. So what separates us is that we have fantastic ease of use. We really are the easiest platform out there. We don't have jargon, we don't have order books, limit orders, or anything like that. We offer both alternative and traditional assets on a single platform, and we offer a variety of behavioral investment tools. So to sum everything up, Revix makes investing simple, engaging, and automated. I look forward to answering any questions that you may have. Thank you.
Great, thanks for that, Sean. I've got to say it was fairly exciting seeing your logo popping up on the side of the pitch at the FA Cup final. So great to see that, and great to see some tools. So let's kick off questions, starting with yourself, Dave.
I'm still upset about that game. I have no idea, honestly. I'm just making that up. Sean, here's my big question for you is understanding. I understand what you guys do and everything. What is the key differentiator to the competition? Because obviously there are others in the space, and gamification is actually I think it's a very slick way to get users. But where do you see potential for some degree of whatever, walled garden or a moat or whatever term you like against your competitors?
So this is an area where we can actually only step into this probably in a year or so's time, because it's actually reliant on prime brokers. So what we do with our crypto bundles right now, which is quite unique, is we use a technology called direct indexing. And what this means is that you actually buy the underlying asset. So let's say you go to our top 10 bundle, you want to buy that top 10 bundle, you're going to buy the top 10 cryptocurrencies directly. And using our direct indexing technology, you'll actually go and exactly buy the fractions of each of those top 10 cryptocurrencies. Now, if you take that same approach and you apply it to, say, the S&P 500 or any thematic ETF, you can take that approach, but the problem is that fractionalization of shares just isn't quite there yet. So you can fractionalize some shares, but not all of them. Now, this is changing rapidly. And I think in perhaps a 2 or 3 year period, you'd be able to circumvent the fund manager. And literally that 60 or 70 bips that you're paying every single year to a fund manager, that could then be essentially something that you save, and your broker then is able to offer you direct indexing. So there's this B2B opportunity, which we're seeing opening up. And we're able to offer this in the crypto space. We're actually one of the few players globally to be able to offer this. But at this point, USP really is just the ease of use. When you go through our platform, there isn't any, as I mentioned, limit orders. There's no jargon. We've completely de-jargonized the entire experience, and that's been our big.
That's great. Thanks.
Thanks, Dave.
Perfect. And Juliet, would you like to ask your question?
Yeah, sure. Hey, Shan. I guess my question is related to the cost of acquisition, which I found with those type of value proposition. It's like the heartbeat, right? If you manage to beat it, you're on a winning strike. Especially with targeting this younger generation of investors that, from an AUM perspective, they're probably the one with the smallest capital to allocate. How are you thinking about those KPIs, and how do you think about this sector which you are in with relatively high CAC? And education piece versus revenue generation in the long term?
Yeah, so I think we've done very well on the CAC side of things. So we have a $21 cost of acquisition at the moment, which is pretty low. And the way that we've managed to do this, I don't think with millennials, you can't BS them, right? You can't lie to them. You have to actually be authentic in what you're offering. So we're currently seeing about 22% of all new customers, active customers that is, come through our referral program. So the rewards program we have, which is, it literally is integrated in everything. Every time you actually do a trade on our platform, you see the reward level that you're on. Every email that you get, they let you know whether you're blue, silver, gold, platinum. And it's that sort of just reinforcement, which has really worked for us. So that's then fed into also being, one of the highest rated investment platform in Africa. So that's been one of our core marketing strategies. And another thing which has worked really well for us is paid media. So we naturally, our job is to educate these newbie investors. So our main strategy when it comes to marketing is paid content saying, okay, right, what is Bitcoin? How do you invest in cryptocurrency securely? How do you do all these different things? Educational piece followed by, the way to do this potentially is through Revix. You build credibility that way. So we found there's kind of that strategy, and we're on podcasts, we're on radio, we're on a whole bunch of other different areas. But that for us has worked really well. And we've established a pretty good CAC, I think, at this point in time.
And if I may just, your AUM per customer at the moment?
This is something where a lot of people go like, oh, I'm quite surprised by this, or they're not surprised. It's about $1,400. Okay. Was that higher than you thought, out of curiosity?
Yes, probably.
Yeah. That is heavily skewed, though, I must say that as well. You've got a few big customers that do skew that entire number. If you look at like the modal amount, you're probably looking closer to about $500 to $600.
Great. And Paul Louis, your question, please.
Yeah, in the crypto space, a great thing is crypto kind of went up and transaction fee are really high. So you can take some revenue out of it, and kind of no one sees it because everyone takes a big share. So you're as expensive as other guys, and because it's going up, we're still making money. So everyone is still pretty happy. But when you move to like other asset class, which are more established and way more efficient, typically like stocks, ETF, bonds, and so on, it's like margins are like super thin. And you have guys like Robinhood who came in and just democratized like, hey, there's zero fees, no fees at all, and we're just going to get some money on the order flow. So kind of long term, do you want to be like a specialized crypto player where you kind of have some nice margins, or do you want to go into the other areas of asset class? And then how do you think you can kind of have a good economic model considering how hard it is to get some revenue?
Yeah, I think that's a great question. So we do not want to compete with Robinhood, Plus 500, IG, or any of them. They're trading platforms. I see traders, being on the one end of the spectrum, and then savers being on the other, and investors being dead center. And that's sort of who we're targeting. We're targeting the people that identify as longer term investors. They may have a core satellite portfolio, but they're not buying and selling on a daily basis. Now, don't get me wrong, obviously there's some Robinhood investors that, hold on for the longer term and they're able to benefit, but Robinhood is very on traditional assets. And, I suppose to answer your question directly, we would very much want to be focusing on all the weird and wonderful areas that Robinhood and the traditional brokerages are not. That also makes us a really good acquisition target later on. So, if you're looking at some alternative funds, like art as an asset class, we're engaging with two different partners, both in the digital space and in the more traditional space, to be able to offer art to retail investors. Classic cars, fine wine, you start getting into some weird things, even like sneakers, believe it or not. There's sneaker funds being formed today, and watch funds, and like the future is going to be super weird, right? So that's sort of where we're wanting to position ourselves. It's like that connection that says, okay, right, so even crypto, right? There's not many platforms out there that actually are that user-friendly. Coinbase, sort of had that USP. But if you start thinking about, the exposure to the NFT space, like how do you currently do that? It's hard, it's complicated. We're launching a product in that. If you're looking at I suppose even the DeFi space right now, like using Compound and all the rest is not easy. But if we can make that really simple, and there's a product we're going to be launching in the next 6 weeks, and that is our USP really. That's like simplifying those complicated processes.
Super cool, super cool. I think it's a great idea to kind of be on markets which are way more liquid, less competitive. You can get big margins. It's much better space to be than in kind of a super efficient stock market running to zero revenue share.
Yeah, definitely.
Sean, thank you so much for that. We do have 2 or 3 questions in the chat for you as well, but we are just out of time for this segment. So if you wouldn't mind jumping in there and answering people's questions, that would be great.
Sure thing.
So,
thanks everyone.
No worries at all. So next up we have Rose from Screenhits TV, a central hub of television streaming. So once again, what we'll do is we'll go straight to the video, get a good idea for the product, and then we'll come back for questions.
Hi, my name is Rose Adkins Hulse. I am the founder and CEO of Screenhits TV. You're going to love Screenhits TV. I love Screenhits TV. Our over 256,000 subscribers love Screenhits TV. And in a few moments, you're going to see why.
Another night in. What are you going to watch tonight? Which app? What channel? Can't decide? Well, you don't have to, because now you can find everything you want in one app. Meet Screenhits TV, a brand new streaming platform that lets you bundle all of your TV apps and channels into one place. Netflix? Yep. Disney Plus, Stars, and live TV, of course. Simple, streamlined, get Screenhits TV. Everything you want to watch in one place.
Screenhits is an aggregating platform that brings together all your favorite TV services under one roof.
We turn the overwhelming mess of the streaming world into an easy and reliable platform.
Screenhits is 8 years old. We began with a B2B platform which sold TV shows to TV channels around the world.
Developed a lot of white label technology for some of the big studios like Warner Media, IMG. And we started to see that there was this new change in the market. So we looked at our existing technology that we perfected over the years, and we realized we had the perfect product, which is an aggregator.
We have built up an exceptionally talented team here at Screenhits TV, with the likes of Humphrey Black and Joe Lewis recently joining our advisory board, and incredibly experienced veterans heading up our regional development.
We've recently signed on BBC, Lionsgate, NBC Universal's Hayu, and a number of others.
We've had some great press, including Forbes, The Hollywood Reporter, Variety, The Daily Mail, Hello Magazine, even Tatler.
When Bloomberg TV reached out to us, we were all just amazed at how our product has gotten out in the market so quickly.
Another benefit for Screenhits TV is that you're able to bundle and discount under one umbrella.
They can see for $15.99, I'm getting these 5 streaming services along with this great access to premium live television. So it makes that whole process easier, and it's one bill.
Screenhits TV has already raised over £6 million that has enabled us to build this fantastic product.
I've never seen a product catch fire as fast as Screenhits TV. We had over 1 million people register their interest. We had over 256,000 people sign up for an account from the US and the UK.
It's the world's best one-stop shop for the world's best TV.
Very slick video, Rose. Very impressed with that. So let's dive straight into the question. So Dave, over to you.
Yeah, you know what, Rose, as I was watching this, I was thinking you have bundled the unbundled in the aggregator, and it's something I need in my life. You know, the question I sort of wonder about is the challenge, I think, with cable networks typically has been where an individual channel, let's say ESPN, will charge a massive fee. That's really what skews the bills, and then you get stuck in these packages and so on and so forth. So how do you guys think about that in terms of being an aggregator versus, say, owning the content? And like, what's your strategy around if they start messing around with your pricing and so on and so forth?
Well, we don't want to own the content because that's in hosting all this content in the world will be a very expensive bill. So that's something that we don't want to do. And there's a lot of people doing it great, from HBO, from Warner Media, etc. The industry right now understands that as people are transferring over from pay TV to app TV, they're kind of overwhelmed with, they're subscribing to Netflix, they're subscribing to Amazon, they're all over the place, but they don't have this one single bill. And so consumers just really want to find out, what am I going to save? If I get rid of my cable, can I still get my sports? Can I still get all my favorite content from HBO Max? And we want to provide that to them. And so from us being able to aggregate it from all of these major players, and then offer them, a very clear subscription bundle, even if they're not getting a discount from Netflix or Disney, but they might be getting one from Stars or DAZN or another one of these really cool sports companies, and it's still cheaper than what they're paying, they want that. So I think that we've found a unique way to address it.
Great, and Julia, over to you.
Yeah, it was very nice presentation, and I would be spot on one of your target customer 100%. I have no idea what I've subscribed, but I'm definitely getting the bill at the end of the month. I guess the question is more in terms of, we've seen a couple of model of aggregator, and the massive risk is when one of the main key player decide to not get along and decide to actually veto your services. So in payment, we've seen that with Amex, that doesn't really want to get into any of the aggregator services, which is a bit of a pain and sometimes kills some of those value propositions. How do you think about that risk of having a Netflix or Amazon Prime or a Disney, which I guess are the main three streaming platforms, saying like, no, we don't want to participate, and hence kind of take out kind of the entire purpose of your platform? That's quite a big risk in the end of not the...
It's the number one risk, actually. And, we've been around since 2012, and we were originally a B2B marketplace for the entertainment industry. And when we saw that our customers were no longer really using our platform to sell content to third parties, we sat down with the Disneys and the Warner Medias and asked what some of their key focuses were going to be. And it was all about them creating their own streaming services. And one of their main focus would be to eliminate that churn that was going to eventually hit when more and more streaming companies started to come to market. So we already had the relationships. When we decided to launch our consumer app, those relationships were there. So right now, if you were to go onto screenhits.tv on the desktop version or download the tablet app, you would see we have Netflix, we have Amazon, we have Disney. And Disney's recent words were that they love aggregators because, we are kind of the power behind them having complete control of their consumer, because we bring the consumer and drive them to their platform. And, as you see, Disney has no longer has the Disney channels on Sky, and they're putting all their focus into their streaming service. So any product or platform that helps to retarget customers, minimize churn, or actually help to take some market share away from others is key. And one thing that's really unique about our platform is that we know every single person that comes onto our service, who they've subscribed to, because the first thing we ask is, who are your existing subscriptions, and you add them. We also know when somebody drops one of those subscriptions. And so we're able to take that data, which is quite powerful, and share it with our partners and help to retarget those people and bring them back. So I hope I answered your question.
Great. And Paul Louis, over to your question, please.
Yeah, exactly. I was going to ask around the data, right? Like how much, I guess, what's key for the suppliers, for all these guys, is they really want to understand who their customers are and get direct access to them. So how does it work? Like, if I pay through Screenhits TV, what does Disney know about me? And, I guess, why they would not just try to push me towards getting straight with a Disney? Are you sharing data with them? Are you sending this data? Kind of, what do you do with all the data you gather?
We do. We share our partners' data, but we don't share, like, for example, we wouldn't share with Disney what HBO is doing. So we never will share that data. What we will share is that out of all the subscribers on the Screenhits platform, X percentage have added Disney to their platform, X percentage have removed Disney from their platform, X percentage are watching this amount of content from Disney. So if a person is watching 30 titles a month, what percentage of that comes from Disney? And then we do share a little bit of stuff, but that's more from our algorithm that helps to recommend content based on their search preferences and their habits. And anything that we promote is targeted. So unlike some of the bigger aggregators or hardware devices out there, like Samsung, for example, we don't sell targeted advertising. So we're not going to be pushing Mulan to somebody that really only wants to watch Roger Federer play tennis. We're very focused on that. And then we use these push notifications. So for example, say like you were a big fan of Bridgerton on Netflix, you know, we know when the next season's coming out and we get trailers and things like that, we kind of push that notification to the consumer. So it's really focused, and we share any data that will help them to market to the right people, but not violating people's privacy.
Got it.
Perfect. Rose, thank you very, very much for that. So we have just one of our, what I'll call our formalized pitches left before we jump into Pitch Roulette. So just as a bit of a reminder, we are going to give the floor for 60 seconds to someone in the audience who's feeling confident enough to put their business out there in front of our incredible audience of high growth founders and investors. So a great opportunity. So just a heads up that is coming straight after the next pitch. So now we have Amir, who has just popped up on your screens. And Amir is the founder of Travel Curious, who provide very immersive experiences within local destinations around the world. So once again, let's go straight to the video, and then we'll come back for questions.
The world is shifting from a service-driven economy to an experience-led economy. As we emerge from lockdowns and quarantines, this shift is expected to accelerate exponentially, from a 1 trillion to a 5.6 trillion pounds per year market by 2030. According to Euromonitor, travel brands are best positioned to capitalize on the experience economy, as they already play a fundamental role in delivering elevated, curated, and authentic experiences for visitors. Tours, activities, and attractions is a fast-growing portion of the experience economy, and seen to be the last travel segment yet to undergo digital transformation. It is currently valued at £180 billion and will have a significant impact on the growth of the experience economy in the years to come. Initial investment in this segment has been channeled to marketplaces that aggregate others' tours and experiences. However, marketplaces only currently account for 12% of the tours, activities, and attractions segment. The real opportunity is the 88% below the waterline, which is currently underserved. The traditional travel and hospitality companies are keen to participate in this space. Fragmentation, limited technology, and a lack of standardization present major hurdles. What they need is a trusted provider, one that can help them on their digital transformation journey, guarantee them excellence while ensuring compliance. Introducing Travel Curious, founded to service this untapped opportunity. Travel Curious is the first vertically integrated business-to-business provider, helping travel and hospitality companies to seamlessly integrate tours and experiences into their customer journeys. We create bespoke experiences and own the inventory. We recruit, vet, and train the guides to ensure compliance, and we distribute the tours and experiences to our B2B partners on an instantly bookable basis. At the core of our service is our proprietary technology, which is comprised of a match and dispatch logistics booking engine and our distribution technology, which boasts the first full API for private tours, together with bookable widgets and agents portal. With our inventory of over 700 beautifully designed, highly engaging cultural private tours, and a network of 800 trusted, vetted, compliant, and highly professional tour guides and local experts, Travel Curious is perfectly positioned to capitalize on this massive market and its trajectory for growth. Our mission is to own this gap, to become the leading B2B provider of tours and activities to hospitality and traditional travel companies. Our vision is that every one of our tours is a truly memorable experience. We strive to achieve this daily. And at the heart of our brand is the curiosity to explore, while maintaining a commitment to making a positive contribution to the conservation of cultural and natural heritage wherever we work. Everything we do is born from the curiosity to discover, because fundamentally, we are all here to explore.
Well, if that hasn't made you want to jump back on a plane, I don't know what will. So, a great video. So, Dave, let's kick it off with you.
That made me completely space out. I have to tell you, I was like, I could go here. Amir, if I'm going to be a little specific in this question. So, obviously, yes, you're a B2B provider, but here's a specific question. What would you say? What's the age range of people who like these kinds of tours? Specific higher end sort of like, so is it a millennial thing? Is it like, what's the market that this is going to go appeal to?
Well, I would say the typical market for the type of product, remember we're a private tour. So the typical market will be the over 30 and typically on average prior to COVID or pandemic was about 2.8 people traveling, but we've seen now since travel's returning, we see now that the group sizes are a little bit bigger. So when you look at the cost on average per person, it tends to drop because there's a bit of a bigger group there. But overall, yes, I would say families and a bit of the older.
So I'm asking because I'm wondering if you have to market to them from a brand perspective as well as to the B2Bs to become your. So how does your marketing work? Because you have a bit of a bifurcated target.
We deal in something that is, we go after companies with proven and existing demand to drive those customers into specific territories. So we look at every single market as a source market and a destination market. And what we try to do is we find the people who have got the demand, but are working on clunky or no technology. And we take those people and we give them the technology we've developed so that they can drive the same people that they're driving, but just in a much easier way, more efficient way.
Perfect. Good answer.
Thank you.
Right, and Juliet, on to you, please.
For the lack of originality, I will go back to kind of my previous question that I had about that, the marketplace, which again, I'd love to kind of understand where is the gritty-meaty in terms of technologies that you're building and what's proprietarian in terms of what you're building, right? Because the booking online, etc. Now you have so much white label that you can get for a fraction of the price. What is the heartbeat of the technologies that you're building?
Okay, so first of all, we're dealing specifically in tours and activities. And tours and activities, there are two elements to it. The people who've gone through digital transformation and are already online, which is the 12% that we saw. And all the other companies, tour operators, travel agencies, travel technology companies that are really, really keen to participate in the space, but they cannot today do it in an efficient manner. So we're not a marketplace. We don't call ourselves a marketplace. We do service some marketplaces, but we're not a marketplace. We're a B2B provider providing advanced digital technology to companies that until today have made their bookings on a phone.
Fair. But fair enough. Okay. Super.
And it's all run, if I had to add one more thing, it's all run out of a core API, which doesn't exist in the space. For private tours, there is no such thing as a core, complete, full API that you can get both pricing, availability, content, and bookings and cancellations. We can do it all through one API. That doesn't really exist today in the market. So on the basis of that, when we go to partners that are looking to engage, they're going from having to do everything on a phone call and appoint a different partner in every city. They're doing one API connection and they get 70 cities and growing.
Perfect. And Paul Louis, over to you, please.
Yeah, just to set a quick clarification. So do you own the inventory? Do you own the content? As in like you vet and everyone and they kind of work for you? Are you just putting in touch existing tour operators with people that are looking to sell the services?
Okay, so we sell tours and activities as a service to B2B providers. We create all the tours ourselves.
Okay, yeah,
and we recruit and
so
vet the guides. Now, this is important because a lot of those companies that have the demand for the customers that Dave was talking about, which is a bit of the higher end, at the end of the day, they want to be sure that there will be excellence. If they're going to extend their brand, they want to be sure that there will be excellence, but more important, there will be also compliance, or just as important, yeah? And so the reason we can do this is because we own the inventory, we've created the inventory, we recruit the guides, we vet the guides, and then once we've got this distributable or this bookable experience, we distribute it through our distribution technology as far and as wide as possible.
I think it's definitely the right play, like owning the content, because, you know, premium experience, like if I'm a hotel, a 5-star hotel, and someone is booking a tour and it's not good, I mean, that guy is going to be unhappy with me, even though I have nothing to do with it. So I think owning the content, while a slower play to kind of scale, is definitely the right way to do it. And it's super interesting. Kind of, have you thought about also, you know, it's a great distribution channel B2B, but have you thought about trying to do B2C as well? I know Get Your Guide has a similar program where they create their own tours and they sell. Do you think long term you might also try to go into B2C? Because, you know, if I go and visit Rome, you know, I might go visit Florence or Milan after, and why not, you know, go directly to you instead of going to the hotel or something that's whatever B2B provider that's going to take a cut?
There's many different ways that we can create more revenue through this service. B2C is an option. It's not something we're looking at right now because it's a very costly play, and most of the money goes off to our friends at Google. So for us right now, we've got real pockets of demand, trying to get people that have people already traveling into those countries. So for us, the B2B focus, I mean, one of the reasons we landed up signing a global contract with Marriott, for example, is because we could provide this higher level of service, but it's us giving them a service, right? It's as opposed to us going to a B2C model. It's there. It's definitely something we can do, but it's not something we're focused in on right now. We do have an offering. It's a shop window. You can see it on our travelcurious.com site. But at the end of the day, we're very focused on delivering to the B2B market for now.
And just one more question. How does it work? If you own the content, do you pay the tour guide a fixed fee, or is it kind of a revenue share model? And if it's a fixed fee, then on the other side, do you try to fluctuate the total price based on demand? So like, you know, I want a tour in July, why it's more expensive than if I want a tour in November. But you still pay the...
You're getting into, so there is first of all, there's what you're talking about is you know, surge pricing and things like that, which we can evolve to. Right now we keep it, but yes, first of all, the guides are not employees, which was something you asked earlier. They're purely freelancers. They're working for us, but they work for others as well. And yes, it's based on a fixed cost. So that's how we do the whole thing, is that we agree a deal with the guides in that city, and on basis of that, we price our product. And so, you know, so we can ensure our margins and our partners' margins.
Oh, interesting. Super interesting project. Yeah.
Thank you.
Perfect. Amir, thank you so much for that. And with that concludes let's call them our formal pitches for the evening. So now we've got a section that I've been so excited about, mainly because it's something new. We're not entirely sure it'll work, but thank God we're up for it. And Dave and the Oracle NetSuite team are up for trying something new as well. So Danny Gray of Warpaint, I see you are brave enough to put your hand up to give it a go. Perfect. You're up now, Danny. I think you're still on mute. What I'm going to do is I'm going to pop a timer on. I will give you...
This is a challenge, James. 60 seconds, a real
60
challenge.
60 seconds. That's all you're getting, plus questions. So what I'll do is I'll pop a timer on. I will give you a shout at 10 seconds, but then I'm going to fully jump in at the minute mark. So good luck. And when you're ready, over to you.
Hi, my name is Danny Gray. I'm the founder of a men's cosmetic brand called Warpaint. Started 3 years ago. It's grown exponentially. However, I'm just launching a new business, which is a non-profit, which is Just Ask the Questions, a mental health platform that you can access via your mobile. And there's world-leading professionals on this app or website for all different illnesses that you can speak to directly. So this is a world leader on body dysmorphia. You can click Start Conversation. The doctor comes up. You press Start Conversation, allow access to microphone.
My name is David Veal. I am a consultant psychiatrist at the South London Multi NHS Foundation Trust, and I'm a visiting professor at the Institute of Psychiatry, King's College London.
So then it comes up, and you can literally press and hold this button and ask him any question you want about body dysmorphia. What is body dysmorphia? Might take a second to load because it's on my 4G.
BD is a preoccupation with perceived defects in one's appearance, and usually a person complains of various flaws.
10 seconds, Danny.
Do you have any tips with dealing with body dysmorphia? Anyway, I can ask this leading doctor in the world any question about body dysmorphia, and you can answer it in the most organic way ever. This could revolutionise mental health. I've got huge interest in it, but it's a non-profit. I'm launching on the biggest TV programme in the UK in a couple of months.
Awesome. Good work. It's always good to see, as I say, a very old-fashioned 60-second elevator pitch that we're all told at school that we should be putting together. So perfect. What we'll do is we'll jump into questions. I know 60 seconds wasn't the longest, so let's dig into it a little bit. Dave, over to you.
I was looking at the cosmetics before, so I apologize. I got excited that I could get my, I'd like to also proffer my own suggestion for a startup, which is that there's not enough soft men's hats in the universe. So just everybody take that as a, feel free to take that company.
My next one, mate.
Yeah, nice one. It's a cool idea. This is an interesting, I think this is actually a lot of the future of sort of what I'd call professional healthcare with the limited touch, right? Where you're sort of, you don't have to go do these things. It's a nonprofit. And so do the participants volunteer their time for this, or how, like, what would be the reason why that gentleman would answer these questions?
Because he's when I say he's the world leader, he's an OBE in the UK. He's the world leader on body dysmorphia and OCD. He's just one of many I've got on there. I've got Alistair Campbell, who's a manic depressive. So I've got from a doctor's perspective and a sufferer's perspective. I've got Alistair Campbell, David Harewood. I'm just about to do 2 massive footballers in the UK.
They're doing this to basically promote to help well-being for the area that they're subject matter experts in.
Yeah, so the issue is for me with mental health, because I suffer with it, is that if you Google, if you don't know what's wrong with you, we're all talking about everything you see in a minute is about awareness. Okay, that's all the campaigns are. There's no solution out there. Helplines, everything like that are very archaic. People wait 10 years to reach out with mental health, and that isn't going to change overnight. So we need something before where people can feel they can come and ask a question and not feel pressured, and ask world-leading doctors. They would never get access to David Veal in a million years. You can ask him any question about body dysmorphia and he'll give you the relative information. If you Google something or you Google that depression, you're going to die. So we've always got interest from the Department of Education about, I've only started this 14 weeks ago. So we've got Department of Education, want to put it in schools. I've got top corporates all over the world who want to enter it into their platform. But the whole goal for me is to have the forward-facing website free, complete, because every question that's asked I have to pay for. It's going to be completely free for anyone in the world can come and ask the world-leading doctors that aren't accessible to people about mental health questions, get the real information from the real people. I promise you this is going to change the world forever in terms of the way you access information about mental health. And it's a way it's never been done.
It's a great idea. Absolutely.
Perfect. Julia, any questions from you for Danny?
Also a very great cause, and that we often don't talk about, and I'm very glad that there is more and more tech digitalization on this specific issue. I guess my question is, how do you create those questions? So you get the doctor for like a 10-hour studio book, and he just spread all his knowledge, and then you cut it with machine learning and language processing, I imagine, and extract that? How does that work?
Right, so we would look at question sets. So we're not coming just from a perspective of people who are suffering with an illness. So there's 3 different types. So this could be someone who's suffering with depression, anxiety, body dysmorphia, and want to ask questions. It can also be someone who doesn't know what it is and just want to find out information, but it could also be from a perspective of a carer, right? So my mum, to have had a platform like this to go and ask the well-being doctor about body dysmorphia, because that's what I suffer with, questions would have changed everything for her. So we went to clinicians, we went to groups within each illness and said, what questions from a family perspective would you want to ask? These aren't big technical questions, but it's what are the treatments for depression? The leading doctor in the world tells you what they are. Is there side effects? How does it affect my sex life? You know, what's the worst thing to say to someone with body dysmorphia? All this information that you can't glean from the website in an accessible way from the right sources, we're going to access that. So all of these, and this is going quite viral. So I spoke to the top of the NHS. So they want to use it as signposting on the main website for the NHS for the whole of the UK because they see the power of what potentially this could do. But at the moment, I'm funding this all through Warpaint. You know, it's costing me a lot of money. So there's 3 avenues I'm going with this. One is corporate partners to drive revenue, because a non-profit doesn't mean I can't run it like a business. So I will have corporate offerings. So the other thing for me about this is data. We're going to unlock data that's never been unlocked before in terms of mental health. And what I mean by that is that we capture every single question that's asked. It's anonymous, but we're going to have a set of rules that when you come in, you have to say what age you are, what sex you are, and what ethnicity you are. We can then link that to the data, and we can start telling the government, who are very interested about it. I can tell you what a 40-year-old black male who lives in the north of England, or between 40 and 50, what are black men thinking about in terms of mental health, what are the top things they clicked on, what are the top questions they asked, compared to a 16-year-old girl in the southeast of England, between 20 and 30, white British female, the top thing might be anorexia. But then we can drill into anorexia and say, hang on, what questions are being asked? Is it about themselves? Is it about other people? And then the other thing we can say, what questions aren't we answering? So we go back, we refilm, and Jack will evolve. So, but in terms of that corporate offering, I'm in the talks with some huge partners now about doing a corporate offering. So we can offer this to corporates who will then be able to give this to their employees, and we can feed back data they've never had before. What are their employees clicking on? What are they asking? So that's already getting huge traction. And then obviously the forward-facing website will have data. The other thing as well, Department of Education are talking to me about putting this across into, believe it or not, into the curriculum for schools. Because this could be can you imagine this in a school? Kids sitting there and say, right, today we're going to talk about, so I'm filming with Tyrone Mings, the footballer, and I'm doing mental health and racism, because he's the poster boy for kick racism out of football in the UK. So I'm filming with him, going to partner with kick racism out of football, because it's been mental health and racism. So imagine that in a school setting as part of curriculum. All right, Sarah, do you want to come up from the back and ask Tyrone Mings a question that you want to ask him, and we'll discuss it afterwards? Could change a lot.
Perfect. Paul Louis, onto your question, please.
No, I think congrats, Danny. I think it's a really cool project, and it's great to be able to do things so definitely using tech for good, right? No, just I guess from the user or patient perspective, right? So I download the app, I ask my question, I get my answers, and then kind of how do you enable me to, I guess, if I ask a question to get help or find doctor, like you mentioned NHS, does it mean then I can get book via I have referral with the NHS, or I can go to like a doctor care or a Babylon Health to see a doctor, or kind of a pharmacy. I'm not sure what's next for me, but like how do you enable me to actually get treatment, or to tell me actually you are fine, you should just carry on.
Okay, so really good point. So for me, if you look at the Google model, all that Google do, you type in something and they send you somewhere. Okay, so Jack is going to be the Google of mental health. And what I mean by that, we're going to have all the right information, giving it to you in the most organic way that you can process it. If you need help, that's not what we're going to get into, because that's not what we are. But we're going to be signposting to certain places that can help you. For example, with body dysmorphia, we are gifting this technology, which I paid a lot of money for. So the doctor and the sufferer, who is myself in this occasion, I'm gifting that tech. They can place it on their website as well. And I'll pay for that. I'll pay for every question that's asked, so they can get it to the right people. So we'll be signposting to each charity that we are partnering with. We are in talks about other options that we can signpost to for treatments. There's actually a guy on here today who I'm sort of talking with about treatments and all sorts, but Jack will not be getting into that because we are an information based. But once you start to understand an illness from experience and you can ask the right questions, it can change everything.
Cool, good project, Danny. Congrats.
Thank you.
Perfect. And then Danny, just to wrap up, you mentioned that you're going to be launching this on TV. I don't know if you want to give any information.
I can't say. I'm not allowed to. But when we launch it, it's going to be big. So yeah. And
then literally just a couple of lines, because we are running out of time. A couple of people are asking in the chat just about war paint. So I don't know if you want to give just a few lines on what that is.
Yeah, so War Paint is a men's cosmetic brand. So I suffer with body dysmorphia. So when I was younger, I was 12 years old, my ears were like this. So I got bullied because of that. So I grew to have body dysmorphia. So I've been wearing makeup for the last 20 years because it's given me confidence. But as a straight guy, that was seen as a taboo. So 3 years ago, I launched my own brand to break down that stereotype. Launched it 3 years ago, and two of us got staff for 14 now. We've sold over 250,000 products across the world. We've got warehousing in Australia, America, Canada, and it's going exponentially at the moment. So, which is, I can't believe it. But this for me, it's been born out of War Paint because I want to give back so much more than just selling products, because that's what the whole brand's about. So that's why Jack is so aligned with what War Paint are doing.
Cool. Danny, thank you so much for being brave enough to put your hand up and give this a go. Interesting format. So
thanks for offering me too.
Danny, we're gonna make the soft hats. That's next.
There we go. An idea that for anyone that needs it. Perfect. And just like that, we are just about out of time today. It's absolutely flown by yet again. But a big thank you to, first of all, our investor panel, so Dave, Juliet, and Paul Louis, for giving us the questions and insights. I'm sure they will be happy to answer any questions that anyone has if they get in touch afterwards.